What is the credit to cash flow strategy? Simply put, the credit to cash flow strategy is the process of borrowing money to create substantial business profits. In our case, this involves obtaining corporate credit loans from banks to fund a passive income business. By passive, we mean with little to no effort on your part. The business utilizes expert trading systems in the alternative markets to generate high, consistent returns. By the way, the banks have implemented this cash flow concept for decades. When you make a deposit to your savings account, you're loaning money to the bank at a very low interest rate, nowadays around 1%. The bank then loans this money out to someone else for a home mortgage, a car, at a rate of 6 to 20%. That's a great deal for the bank. Our credit to cash flow strategy utilizes the same process, except the borrower is a passive income business that obtains corporate credit from the bank at low interest and uses that capital to invest in a diversified portfolio of proven expert trading systems. These systems generate a substantially higher monthly income than the cost of borrowing that money. These trading systems have historically generated an average of 6% monthly or more and represent an excellent opportunity to create monthly profits. Why would you want to borrow money to fund this kind of business? Simple. If you could borrow money with a debt service of 1% a month and use it to generate a return from your business of just 2% a month, how much should you borrow? As much as you possibly can. If you can reliably make more on borrowed money than it costs you, you want to borrow as much as you can. But isn't borrowing money a mistake? Not all borrowed money is considered debt. Money borrowed for consumption definitely creates debt. But if you borrow money to create profits, that's called business capital. If that capital is utilized to create passive income, it creates cash flow and increases the net worth of the business. The lender gets their fees and your business provides you with monthly income, so everybody's happy. Can you get there without borrowing money? You could, but it would take a lot longer to generate enough capital to really change your financial situation. If you could double your investment money every year, starting with even $10,000, it's still going to take several years to generate any kind of life-changing return. And you've got to consider certain factors going against you along the way. 1. The longer you wait, the more likely some obstacle will appear in your path, diminishing your progress. For instance, a downgrade in your career, a health issue within your family, the rising costs of education, or care of an elderly parent. 2. Roughly every 7 years, a financial calamity occurs in the markets that once again erodes any progress you're able to accomplish, like the S&L scandal of the 1990s, the downfall of Enron and WorldCom, the real estate crash and recession of 2008, mortgage fraud, taxpayer bailouts, and who knows what else is coming. 3. Inflation is always there, whittling away at your net value every year. You must make at least 3% a year on your net worth and your investments just to break even with the cost of inflation, much less make progress towards your financial goals. Most business mentors will tell you that lack of adequate funding is the primary reason businesses fail. A passive income business is no exception. So what can the credit to cash flow strategy do for you? Let's do the math. Utilizing only your investments, let's assume you can generate a 50% annual return on your expert trading systems. Starting with $10,000 in your portfolio, if you invest all your funds and compound your returns, you will have $171,000 after 7 years. Not bad. But will this amount really change your life? Utilizing credit to cash flow, let's say you use half of that $10,000 to acquire corporate credit of $110,000 and invest 3/4 of that in your investments. Assuming a 12% annual interest cost and a 50% annual return on your portfolio, after 7 years you would have $786,000. $786,000 versus $171,000. That's 4.5 times the amount returned using the credit to cash flow strategy. As an added bonus, with the credit to cash flow strategy, after 7 years of investing and having made timely payments, you've also boosted your business credit rating and are in line to borrow even more, which is very hard to accomplish nowadays but extremely valuable. And if you think that obtaining credit of any kind is too difficult in this economic environment, or that your credit scores are just too low to consider this strategy, there are still ways to qualify for strong levels of credit. Of course, you want to be confident that returns of at least 50% annually can be generated in your investment portfolio. You may think this is difficult, if not impossible, and actually it is if you take the long, painful route in the traditional markets. But look around. There are many individuals and businesses out there that expect these kinds of returns and count their annual income in the millions rather than the thousands that too many of us accept as normal. For more information on how to generate significant returns by creating a passive income business through the credit to cash flow strategy, please see our other videos or go to our website to learn more.